All right. What's up, guys? Hope you guys are having a great day today, and welcome back to the channel for another episode of the weekly market analysis. Love it. All right, let's go ahead and hop into it. We got three different currency pairs that I was looking at today. We've got a lot of other currency pairs that we've been looking at for the entire week here. We actually have quite a few trades that we've been taking here. Let's see. Yeah, you see, we took the Aussie Yen Trade here on April 21st. So that was Tuesday. As you can see, we broke below this structure level right here. We broke below, we closed below, so we had a lower low, lower close. And we essentially, now there are two different sides of this trade. So the trade that I actually took was really more from here. You see, we broke above and we closed above all the way up here. So we had a higher high, higher close from this high right here, this previous high. As a result of that, we retraced all the way down here and hit the 618 fib retracement level. This was where I decided to go ahead and get long because I was basically making the assumption, or at least I'm making the bet, that I think it's going to go up after this. Now, we've already had a 2 drives complex pullback. This could be a reversal, and if it is, this isn't a pullback, and this will continue lower and I'll get stopped out, more than likely. Now, where I measured my fib retracement level was from down here. I did swing low to swing high, and that's where I got my 618 fib retracement level. Now, granted, I have to be honest, I probably should have measured from down here, or at least this would have been the more conservative approach, is to measure from this swing low all the way up to this swing high. But I decided to measure from here because there's no real guarantee that we would have gotten down to a 618 retracement level in this area that would have resulted in a long position, a much larger long position being entered. So I decided to go ahead and take this trade. Again, this is all hypothetical. When I say I decided to take a trade or not take a trade, I'm not referring to taking a trade with real money. Okay, as you guys should know by this point, it's all hypothetical. It's all just me practicing. That's all this is. It's not real money. All right, this is me practicing my trade analysis. That being said, guys, so this is currently gonna, it's going higher for a little bit. This may roll over. Hopefully not. Hopefully it'll just continue higher. Another way you could trade this is kind of how I was talking originally. Because we had a break below, close below, you could theoretically draw your fib retracement level from the swing high, from this swing high to this swing low, and you'd get a 618 retracement somewhere in this area. And let me see if we actually did. I don't believe that we did. This is Aussie Yen. No, we didn't do that, but you could have done that, and that's kind of actually what I originally started talking about, as if I had done that, because I just saw it and I was saying, oh yeah, well there it is, when it's reality. No, I measured it from here. Sorry about that, but yeah, you could do that. You could measure from this swing high to the swing low with your fib retracement tool, and you would get a 618 retracement right here, and you could look for this thing to continue lower. That's not necessarily a bad idea. You would kind of be hedging your risk, though. You're kind of taking two completely opposite trades. One trade is long, the other trade would be short, but that would be your prerogative if that's something you want to do. For me, right now, seeing as which I just saw this, the fib retracement level would 618 would probably be somewhere around here, and I don't know if that's something I'm all that interested in getting involved in, but, I'll take a look at it later. All right, now we're going to go Euro Pound. This was another trade that I took. This was actually a trade that I took longer back. Let's see, what was the entry? The entry was at 3 a.m. I actually put this trade on Friday. Okay, I actually put this yellow line on Friday of last week. And then and Monday, I didn't actually come into the market. It kind of took Monday off. I had a really very busy weekend. I was working a lot on, video and content creation and stuff of that nature. I got a podcast. I've got several episodes up and running. It's the Matthew Spazziti program. I know, it's my first name, last name, program. Not exactly very original, but I do talk about economics. I talk about entrepreneurship. I talk about trading. And in reality, I talk about how to become financially free and how the way you fix stuff with regards to all the problems that are in the world is you don't fix it through politics. Nothing ever gets fixed through politics. You fix it by becoming financially free. So by having the money, you are able to live a much freer and much more abundant life. If things go bad in your country, if things go bad wherever you are, you can leave. You can protect your family. You can protect yourself. And this is a very, very important point that we will drive home towards the ending of this episode when we're not really talking about charts. But just keep that in mind. We will be talking about that, and I will probably be giving a little pitch for my podcast. I mean, hey, I want more listeners, right? I mean, I want people listening to me. It's fun. Anyways, that being said, guys, you know, this was a trade that I found on Friday. It got filled on the 21st, so that was yesterday, so Tuesday, and then it got stopped out pretty promptly on the same day. So we got filled at 3 a.m. We got stopped out at 6, so within 3 hours. So yeah, I posted this just to show you guys, to try to be, you know, transparent and honest. You know, I legitimately, when I put the yellow line on, it means that I want to take the trade. And if it gets filled and then stopped out, although I don't want to show you that, you know, emotionally, I'm like, I don't really want people to see that. You know, it hurts. You know, I wasn't even actively watching this trade. You know, a lot of thoughts run through your mind. But hey, I'm like, you know what? I took the trade. The yellow line means I'm taking the trade. I need to be honest about it. I need to show it. And it resulted in, this is euro pound, this resulted in $50 loss. So right now, the account, I'm going to show you that here in a little bit, but the account is not looking very nice. We've lost a lot. A lot of trades have gone against us, but, you know, we'll talk about that in a little bit. Euro yen was another trade that we took. It has not come to fruition yet. It's just kind of going sideways, which is, it keeps getting rejected, which is a good sign. Whether or not it's going to break out or fall lower, I don't know. But I'm hoping it will fall lower because, quite frankly, I need a win for this portfolio, TradingView practicing portfolio. I definitely need a win. It would result in a 65 hypothetical dollar winner. Let's go to the pound Swiss. Pound Swiss, as you can see here, again, it was already a loss when I posted it. This was another one of those where I took the trade on Friday and it came to fruition on Tuesday, and then it got promptly stomped out on the exact same day, Tuesday. And I just wanted to show you that this was my analysis, and it was essentially a failed analysis. It didn't work out. Now, we are going higher, so is this a temporary retracement and we're going to continue lower? Or is this actually reversal and we're going to go higher? You know, I honestly, I don't know that answer. I have no real idea. I think that we have been, if we zoom out all the way here, we have been bearish for at least since February 14th, and it's not showing me the rest. So this could be just a you know, short-term decline, and we could be going back up after this. I have no idea. Just gonna have to wait and see on that one. So it's pound Swiss. Let's look at the pound dollar. Pound dollar, ladies and gentlemen. So this was a trade, again, I put this trade on Friday. It was a trade that I put the yellow line on, and I was telling myself I'm going to take. When I originally found it, I saw that we had declined under the entry level, and I didn't actually want to show it because I hadn't gotten stopped out, and I hadn't gotten my target hit. So, but for the sake of being honest, which is, you know, incredibly important. As I've said to you guys, my goal here is to be completely honest. I wanted to post it anyways. I'm fairly certain it's going to be a loser, although it's having a little bit of a retracement up here again, but I think it's going to continue to roll over. Honestly, I don't think that this is going to rally in the way that I was hoping it would. I mean, if you look back on here, let's continue to zoom out more. We've been bearish since December of last year. So currently, you know, I don't know. I mean, yes, we had this retracement, but is this just a a very large two drives complex pullback? I don't know. That's what it kind of looks like to me. It looks like we've already descended under here and we're going to go lower. Now, if this starts to, you know, start stair-stepping its way higher, then I'll change my opinion on it, and I'll probably flip to the idea that this could legitimately rally. And, you know, I don't know. I really have no idea. But I mean, I have an idea, but I'm not 100% sure of what I think is going to happen. And, you know, in reality, nobody is. I mean, you can do all the backtesting in the world. You can do everything that you need to do, but in the end, you're not really going to know 100% what's going to happen. All right, so the actual 3 currency pairs that we're going to look at on actual charts that we took literally today is New Zealand CAD, Pound CAD, and Aussie dollars. So let's go ahead and jump into that. So as you can see from the New Zealand yen, or I'm sorry, New Zealand CAD, we're basically just kind of consolidating. We're creating what is called here a wedge pattern or triangle. It's basically a sideways triangle. They call this a wedge pattern in the trading industry. And ultimately, this is not an ascending or a descending wedge pattern. An ascending wedge pattern is where you got a straight line like this. You have a straight line up here, and you essentially have, you know, stuff like this. I wish I had hotkeys here. I unfortunately, I'm sorry, I don't really know the hotkeys for TradingView yet. I don't know. I'm terrible at learning that. And one more. Okay. Oh, actually, this is. Oh man, this is actually the opposite direction of what I wanted it to be. This is totally not the way it should have been. Sorry, that triangle was completely reversed. So okay, let me show you how it should have looked. So I drew it this way. It really should be drawn like this. And actually, this isn't an ascending triangle. I do apologize. This is a descending triangle, okay? The reason that it's descending is because, as you can see here, and I'm doing this backwards again, not drawing it backwards, but I'm not drawing it in the right order. I should realistically be starting from the left and going to the right. So reading from left to right, what's happening here is that we're getting consolidation, right? It's a sideways consolidation. This is a descending triangle because, as you can see, the market is bouncing off the same point, but the highs that it's creating are lower every time. So the market continues to bounce lower, lower. It's like a little bouncy ball. For those of you who remember your childhood, it's like a little bouncy ball that's bouncing lower, lower, lower. It's losing energy, it's losing momentum, and essentially it's descending. Now, what this pattern represents is the idea that we could eventually fall. Just like here. We break under this support level, and that is what this pattern usually represents, is that it's a bearish indicator, okay? It's an indicator that we're going to fall. Now, this doesn't always happen. Sometimes we have a false breakout like that, and then we rally. That can happen. That totally happens. It can happen. It's not out of the realm of possibility. Now, the opposite is literally this pattern flipped. Basically, it's and it's an ascending pattern, ascending wedge pattern, where basically you've got a straight line on the top, you've got the curved or the angled line on the bottom, and you're bouncing here, and you're bouncing here, and you're bouncing again. The bouncy ball is, I mean, it's kind of upside down, so it's really weird, but essentially you're bouncing against the same resistance level now, and you're getting, your lows are getting higher and higher and higher up until finally the idea is that it breaks higher. Now, again, you could have a false breakout and it could break higher and then it could go low. It doesn't matter. Anyways, this is not one of those. Okay, you got a short lesson on ascending triangles and descending triangles. But that's not what this is. This is a wedge pattern. Okay, that's what this is called. This is a wedge pattern. And this, all it means is that the market is unsure about what it wants to do. This is just all this represents is indecision in the market. That's virtually it. So really we're going sideways, sideways, sideways. Are we going to break down? Are we going to break up? I don't know. But these movements are getting lower and lower and lower. Now, the reason I took this trade is because we broke above this structure level right here. and we came all the way up and we are retesting this structure level. So far, we have gotten rejected. There is a good chance, however, that we are going to rally and break the structure. There's also equally just as good of a chance that we're going to fall through the floor and stop me out. So what will happen, I don't know. Traditionally, I don't like the fact that this didn't create a new high, but it did break above here. So this isn't a trend in a way. This is how you can take a trend continuation strategy in a consolidating market. We did break above, but we didn't break above a more major structure level. This would be more of a minor structure level. And anyways, the point is that we broke above, we closed above, at least with regards to the most recent lower high or higher low. Really more, I can't really call this a higher high because it wasn't really higher than this, but the more recent high. And then we kind of retraced. So we are almost oversold here on the RSI. Let's see, we are 18. So we are officially oversold on the RSI. So hopefully we will continue to rally from here, and we'll end up retesting these highs again, and we'll end up making some money. Right now, New Zealand CAD, we are going, if we get stopped out, we're going to lose $79. If we hit our target, we're going to make $102, again, hypothetically. So that's the New Zealand CAD. We'll go ahead and close that one down. Yes. Pound CAD's doing exactly the same thing. We have a wedge pattern. And again, all it means is that the market is being indecisive. Those of you guys, you know that COVID-19 is spreading and everything, and as a result of that, there's a lot of market activity or lack of activity. You know, people aren't getting out, they're not buying, they're not consuming. You know, unfortunately, people don't have much in the way of saving, so people are suffering right now. They're going through a really, really hard time. The reason that these currency pairs are trending sideways, they're just chopping sideways, and we're getting a wedge consolidation. The reason that that's happening and indecision is in the market is because we don't really know whether or not the markets are going to go higher or lower. We don't really know whether we are on the cusp of a recession. Many people are saying the recession is already here. I'm inclined to believe that they are right. I think you can't stop economic activity, which is what the governments around the world are doing. You can't do that without serious economic consequences. You're going to kill jobs. And as a result of that, this is what we're going to be in a recession. And it may be a depression. It kind of just depends on how everything plays out. So far, I have a tendency to think it's going to be a recession. I could be wrong. Hopefully, you know, governments will loosen the reins here and stop choking the economy, and eventually hopefully we'll get back to work. That's the hope. But that's why a lot of these currency pairs are going sideways. You know, they're looking for earnings reports to come out. They're just looking for what is the overall economic activity. You know, what is economics telling us? What's really happening in the economy today? And they're trying to get a gauge on that. And that's actually why I think that we're going sideways. So here in this pattern, we came up, we went down, and we came up again, breaking and making a new higher high, higher close, at least with regards to this one. It's not really a new higher high, higher close because we didn't break above this. This would be a new higher high, higher close. But we did break above, and we made a new higher high with regards to this structure level. So what I did was I took my fib retracement tool and I measured from this swing low to this swing high. And we got our fib 618 fib retracement level right here. And so I found this trade on April 21st at 9 a.m. This is when I found the potential. It had already touched the 618 retracement level. The problem is that I found it late. So I had to wait for it to retouch the fib retracement level, which we did an hour later. See, this candlestick right here actually ended up touching it the fib retracement level again an hour later, and that is what, in fact, got us involved in this trade. So, I don't really know if this is going to violate this low and continue to go down. I mean, we could be getting rejected right here. This is pretty major, you know, this is a pretty major structure level. and a pretty major resistance level. So this could be a big rejection that gets us to go down further. It may even cause us to break below new lows. I don't really know what's going to happen, but so far we had a new higher close with regards to the recent structure here that we're looking at, and that shows me that there is a possibility that we could head higher. Now, if you wanted to flip this, you could flip the argument, and there is also a bearish signal here too. You could say, well, we closed below this structure low. We made a new lower low, lower close. So we're retracing. So what you could do is you could measure your fib retracement tool from this swing high to this swing low. Now, we never really got into a 618 retracement, but let's assume that we did. You could short here while you have a trade for the long side. You could short here for the short side, for the bearish side. And you could wait to see. But we never really got the 618 retracement level on that end, so we couldn't have taken that trade one way or the other. So it'll be interesting to see what actually happens here. Right now, for the pound CAD, we are risking $149 for 206. It is, without a doubt, the biggest trade that we're taking today. I think there is another trade that we took yesterday, the pound dollar. We're risking $194 for 296. We covered that briefly. That's by far the biggest one. Now remember, we're not taking trades over $200. So 194 is cutting it pretty close, but it still is within the realm of that we can trade in. We can't trade anything above 200. We can, however, take trades that are 200. Now, so far the pattern is losing, so we might have to change that strategy and have a rule that we can't take trades over $150 or over $100 or something like that. We just may have to end up controlling our risk, and that might mean keeping ourselves out of more and more trades, but it might actually mean making this crazy trading strategy on all these currency pairs. It might actually make it profitable, so I don't know. Next trade, Aussie dollar, Aussie USD. Yes, I want to exit. Right now, we do not have a wedge pattern. What we have here is that we were in a downtrend. Literally, if I go into the daily chart, we were in a downtrend since August 2011. And what is happening here is that we kind of fell off the cliff. You know, we had a falling knife type of situation, and now we're kind of trending higher. Question is are we going to continue lower or not, or are we going to continue higher? I mean, that's always the question, isn't it? So in this particular trade, I went ahead and I drew. So for this orange line, remember, the orange lines represent the secondary entry point that I'm looking to potentially take. So if I draw from this swing low to this swing high, because we did break above this structure level, then if it was to retrace to this 618 retracement level, I would go long and hope that it would increase, you know, the market would retest these highs, 64.43. Now, we haven't gotten down to that yet. I just want you to know, this is one of the things that encouraged me to take this trade. You see, at first, I was thinking, well, hey, we don't actually have a trade here. You know, we haven't reached this 61.58 price level, so we don't really have a trade. But when I examined this chart a bit more closely, in fact, we do. I actually found this trade yesterday at 9 a.m. And in fact, this red candlestick, it closed below this green wick over here. This is a new lower low, lower close. And this is what gave me the justification to take this trade. I figured, hopefully, the market is going to fall down here to the 61.58 price level, because that's the fib retrace, the 618 fib retracement. It's like the golden ratio. And hopefully, if that happens, we are going to essentially have a great opportunity to short. And I was watching this pattern, and yesterday we finally found that opportunity. So we closed below, we retraced up here, we had a big green candlestick that got rejected, and now we are kind of trending a little higher. So this could be more of a, even though we closed below, this could have bounced off this support level, and this could rally on us, and, you know, we could get stopped out. Or it could be attracted down to this level in the 6,300. Now, this is This is a pretty nice level too, an even handle number. Markets tend to like these levels. I don't know why, there's a psychological reason for it, but for whatever reason, traders really like these kind of levels. So the markets tend to be attracted to these even handle numbers. So we definitely want to keep an eye out for those, but I don't really take them into consideration when it comes to my trading. I just look for, do we have a break of structure? Yes. Do we close below? Yes. Okay. Did we retrace to the 618 fib retracement level? Yes. So we draw our fib retracement from the swing high to the swing low. There's the 618. Did we touch it? We did. All right, let's get involved. And that's pretty much how I look at it. I don't really look at much anything else. Now, sometimes this causes problems. Should I have measured from here or here? I would say measuring from here because we had a initial high, initial low, an outside return, a retracement, and then we had a new lower low, lower close, and now we're retracing back into 618 fib retracement level, and because we had the new lower low, lower close, the assumption is that this is the market indicating to us that it intends to go lower. So that's the whole assumption behind the strategy that I'm more or less practicing here. It's very simple. It's an incredibly simplistic strategy. It doesn't take a lot of work to do, and if this is the only strategy you're trading, you need to back test it, of course, but you could trade it on tons of stuff. I mean, look at how many trades are, since this was the last trade, and, you know, we're just going to have to cross our fingers and hope for the best with this. Let's go ahead and close this down. I'll leave that up. All right, let's go back to here. This right here is the TradingView Trade Analysis Journal. For those of you who are just joining us, I track every trade since 2019, July of 2019 to be specific. I track every trade since then when it comes to TradingView. Whether it was a trade that came to fruition, whether I was watching it or not, this is what I do. And so far, we have 82 trades. I know that it says 88 there, but you have to understand that there are a good 6 different rows that aren't really being used here. So that 88, you really would need to subtract 6. And so we are at 82 trades total. So far, performance, as you can see right over here, this is the rolling return, not doing so well. We're at 24.75, and that's without a lot of these trades coming to fruition yet. We currently do not know what is what's going to happen here, and that's okay because that's basically trading. Now, I don't consider trading to be gambling. I know there's a lot of people that do. They think trading is absolutely gambling because you don't really know what's going to happen. And the definition of gambling is essentially engaging in some kind of venture where you don't know the outcome. But then again, by that very same definition, getting in your car would be considered a gamble. Life in itself would be a gamble because you don't know the outcome of life. You never do. But that being said, there are decisions that we can make in life, yes, that have certainty, they have very, very high probabilities, and you could probably say 100% you know what the reaction is going to be. But there's a lot of decisions that we make in our life that we don't know what the outcome is. If you get a job, do you know whether you're going to be able to keep that job permanently? Do you even know if you're going to like the job? No. So is that not a gamble? You know, do you know whether it's going to be a great working environment, you're going to pay lots of money or not? No, we don't know. But anyways, life in itself is a gamble, okay? I don't consider this, what I consider to be gambling is when you go into something and you're just doing it for the thrill of it, for the emotional high that you get, the adrenaline rush, if you will, that you receive from engaging in that kind of activity. That would be more of a gamble. So you have no interest in tracking performance. You have no interest in actually playing the odds and the probabilities because you are not concerned with that. Your concern is simply just to get an emotional high off of it. That would be gambling by my definition. Because in trading, you can gamble. It can totally be where you're just engaging in it to get the emotional high of winning. And it can follow really low emotional lows, and then it can follow really high emotional highs. So you can treat trading as gambling, but if you're doing it like a business, if you're treating it like a business, like I'm telling you guys you need to do, like I'm treating it, you're going to be tracking your performance. And if you're tracking your performance, then you are no longer taking these trades so blindly anymore. And that would mean that now you are no longer running into situations where you are just taking the trades for emotional reasons. You know, this is not a get-rich-quick thing, okay? Get that out of your head. This is not a get-rich-quick thing. This is a business. Traders are entrepreneurs. You got to come up with your trading strategy. If your trading strategy has historical performance and not only is it performing well historically, but it's also performing well with live data, then you have created an asset for yourself that produces money. So you are very much an entrepreneur. You are very much a business owner. You need to treat it as such. Anyways, we've talked about that before in other previous videos, but I just wanted to show you, we are waiting for currently 4, 5, 6, 7, 8, 9, 10, 11. We're waiting for 11 trades to come to fruition now, and hopefully they will all be positive. However, I have a feeling, judging by the performance of this so far, it's mostly going to be bad losing trades, but, you know, I just want to show you guys this, where we are currently, 24.75. That is where we have last landed on, and yeah, hopefully it gets better. But again, this is unbacktested. I think only about 2 of these currency pairs have been backtested with this strategy. That would be, oh man, I'd have to actually look. I don't really even remember which ones I've already backtested this on. It's only been 2. It was, I think, the Aussie CAD and the Aussie USD. And I think currently I am now backtesting over the CAD Swiss. So far, there is a positive expectancy on the CAD Swiss, so hopefully we'll be able to add that to our portfolio when we actually start trading live money. But, you know, we'll have to see. You don't really know. You don't really know. Let's go ahead and close that out. Alrighty. Let's go ahead and talk about the topic that I kind of mentioned before about why it's important for you to become financially free, because it's really more of an answer to a lot of the world's problems, as opposed to looking to politicians and voting at the voting box and stuff of that nature. So really, guys, what I'm trying to get to you is that focusing on yourself and becoming financially free and not being dependent on a company, not being dependent on the government, is such a freeing experience. And ultimately, it's the only thing that's going to set you free. You know, there are so many problems in the world that I hear so many people complain about how they never have enough money, or they're never, you know, just life is hard, they can't ever get ahead, and they always are constantly blaming it on other external factors. They're blaming it on their bosses. Maybe they're blaming it on some kind of external factor like politics, racism, sexism, ageism, whatever. And in the end, there's so many people that are saying that I can't get ahead because of this. I can't get ahead because of this. This isn't working out and I'm angry because of this. Guys, the reality is that you can get ahead. Most of the time, the issue is you. The issue is not some external factor that you can't control. Most of the time, the issue is you. The issue is that you are unwilling to do what is necessary to become financially free by controlling the source of your income. Being a trader is controlling the source of your income. You are creating a strategy that is going to start and help you produce money down the road. This strategy can be viewed as an asset. It's helping you produce money. It's helping you to grow the money that you apply to it. In some instances, if you automate your strategy, then it produces the money on its own. And all you have to do is manage the software and make sure that it's trading your strategy correctly. And that's it. But you are very much an entrepreneur and a business owner. And in the end, this is how you become financially free. You become financially free by controlling the source of your income. So that if anything bad were to happen, let's say there's political unrest, let's say, you know, you get a president, like there's a lot of people right now who don't like Donald Trump, right? You know, there's a lot of people who don't. And, you know, I mean, there's a lot of perfectly legitimate reasons as to why they don't. And there are a lot of reasons that I think are not legitimate, but there are, either way, the fact remains is that, let's say you didn't like the next president, El Presidente. Let's say you just wanted to, you don't like him. So you could leave. If you had the money, if you had mobile income, because if you're making money online, then your income is mobile. You could take it wherever you want. You can earn the money no matter where you are. As long as you have an internet connection, you're good to go. You could literally leave. You could move to a completely different country. You can move to Canada. Or if Canada's not to your liking, I don't know. I was just kind of spitballing, but you can move anywhere. Go to New Zealand. Go to Australia. Go move to Hong Kong, Singapore, wherever you want to go. Go to Japan. It's a pretty cool place from what I've heard. Never been there. Always wanted to go. But the point is that in order to become financially free, you have to control the source of your income. And the answers are not in politics. Have you ever noticed that it doesn't seem to matter who you vote, the problems never, ever seem to get fixed? I don't know about you guys, but when I was growing up, I was always told to vote one way. I grew up in a Republican, very Christian conservative family, and we always voted Republican. And I have to be completely honest with you, I never questioned it when I was a kid. Most people don't. As I got older and I found my mentor, he kind of opened my eyes to the idea that really there isn't a big difference between the two political parties in America. If you are unaware, let's say you don't live in America and you live somewhere else, there are two political parties in America. Technically there's more, but there are two parties that honestly are the most popular, and the other ones, most people, they don't hold really a lot of power or influence over anybody. There is the Republican Party, and then there is the Democratic Party. The Democratic Party and their narrative is essentially that they favor big government, more taxes, more spending. They used to be opposed to war, but now that a lot of them are starting to promote the idea of war. And largely the Democratic Party here is starting to fracture. There are parts of the Democratic Party that are becoming more socialistic, but in the end, they're for bigger government spending, more government power. And the Republicans used to be for limited government, controlling government, preventing government from becoming too powerful, too strong. And that's what they were really supposed to be about. And they were supposed to be for reining in government spending, and because governments are always spending more money than they take in via taxpayer dollars, and they're trying to rein in the amount of debt that the government is getting itself into, and all of those kinds of things. But in reality, it turns out that Republicans and Democrats are pretty much the same. They have different rhetoric, they say different things, yes, but they are effectively the same. Both Republicans and Democrats both say different things, but they both increase the size and the scope of government, and they both increase the spending of government. If you look at it from a very basic viewpoint, they virtually both do the same. Some of the largest government spending sprees the government has ever gone on, government spending has almost always increased very high under Republicans, under Republican administrations. And the power and the intrusiveness of the power of government has definitely occurred more under Republican control as well as Democrats. President George Bush did the Patriot Act. Says he was protecting us against terrorists. But now they're constantly surveillancing the entire citizenry of the United States, the US of A. I don't know about you, but it doesn't necessarily seem like there's a difference between the two to me. I don't see that difference anymore. I see that they pay lip service to different things. The Republicans pay lip service to conservatism and free markets, but they never actually show that they're true believers or principled in that, because they never actually do anything to support those. Hardly. Sometimes they'll cut some regulations here and there, but for the most part, those regulations they cut can very easily be reinstated. And most of the time they increase the size and the scope of government, the power of government, and they also increase the spending of government as well. So really, they're not conservative whatsoever. It's just they're paying lip service to something. Anyways, the point here is not about to give you guys a political lesson on the United States. And to be fair, on the podcast, we do talk about politics from time to time. It's not the main focus of the podcast, but we do talk about it because when you're talking about economics, it's very difficult to talk about or to not talk about politics. Try talking about economics without talking about politics. It's very, very hard. So we do talk about politics, but it's not the major purview. But the podcast is called the Matthew Spazzini Program. Here is the URL, the Matthew Spazzini Program.podbean.com. I don't have an actual, this is the website that I have for it. It's not actually on my New Millennium Wealth website yet, largely because I haven't been able to get a podcast audio app to go on the website yet. I'm still trying to figure all that out. But the fact is that, I post stuff about trading here. I post stuff about what's going on in the economy. The next episode is actually going to be about the negative oil prices that we saw in the March, I believe it was the March. Yeah, it was, I want to say it was the March futures contracts. And we saw them dip below negative prices, and it's very bad. It can be a very bad economic signal, but I wanted to explain why that happened. So that'll be in the next episode. Make sure you tune in for that episode. Also, make sure, I only have 6 episodes right now. I don't have a ton. Go listen to them all. And if you like it, great. Make sure to subscribe, make sure to download the episodes, and make sure to share it with a friend. Help me to get more people into this and spread this message of liberty, financial freedom, and all that kind of stuff. We need to spread this message. My goal here is just to get people to think in the way that I'm thinking, and how the goal is to not go to the voting box, because that doesn't do anything. It never helps, ever. You're voting for essentially the same political party anyways. And it doesn't matter what country you're in. And this is virtually the same in just about every single country. All the political parties that are out there, they're all virtually the same. They want to enslave you to them. They want you to be dependent on them because they want to take your money via taxes that you earned and they have no right to. They want to tell you how you can live your life, how you should live your life, and they think you're apparently too stupid to figure that out for yourself. It doesn't matter what country you are in, guys. Governments are virtually all the same. But focusing on that and complaining about it constantly is not going to solve the problem. In order to solve the problem, you need to point the finger at yourself. Focus on yourself. Become financially free by controlling the source of your income so that you can essentially leave. You can control your fate. All right? That's ultimately what the podcast is all about, is controlling your destiny, controlling your fate. We are the captains of our fate. We are the masters of our soul. I believe that wholeheartedly. Sure, there are things that we can't control that do happen, but in the end, we can control our reactions to those situations. But the point here is that you're not going to be able to fix the problems through senseless regulations and voting. The only way you're going to be able to fix the problem is if you become financially free. So, I'm repeating myself, but that's generally the idea of the podcast, is to talk about economics so that we understand what the problems are, and then we also talk about in trading, investing, entrepreneurship, and really I like to lump all that up in just financial freedom. Financial freedom and economics is what we talk about, and we do occasionally talk about politics from time to time. I think sometimes I have a tendency to go on rabbit trails and definitely go on rants about politics because I'm very passionate about that as well. But in the end, it's not the main focus of the podcast. So if you guys are interested, go check it out. Make sure to hit that follow button, and also make sure to share the show. And I hope you liked this episode. If you did, give me a thumbs up, subscribe to the channel, and don't forget to share my YouTube channel. Don't forget to share my content. Let's get this message of financial freedom and individual empowerment to the rest of the world. I mean, literally, let's get it to as many people as we can. We need more people to start looking at themselves and start asking the question, what can I do to fix the problem? Not point the finger at somebody else and say, you need to fix the problem or you need to fix the problem. We need to look at ourselves and ask, what can I do to fix these problems? And if I'm unwilling to do anything, then I need to stop complaining, because clearly it's not a problem if I'm unwilling to do anything about it. All right. Well, if you guys like that, I'll see you guys in the next episode. As always, know the risks, plan accordingly, and have a great day.